All right, let's talk about Block Inc. You know, the company behind Square and Cash App. We're diving deep to answer one huge question. Is this stock just dead money at this point, or is it secretly one of the biggest deep value opportunities out there? Because right now, there is a massive disconnect between its stock price and how the business is actually doing.
Okay, first things first, we have to talk about the elephant in the room. I mean, look at this chart. To say the last few years have been rough for Block shareholders is a wild understatement. From its peak back in 2021, the stock has just been in a free fall, wiping out nearly 3/4 of its value. It's been absolutely brutal. And you know what makes it even more painful? While Block was collapsing, the rest of the tech world, the NASDAQ, was surging, up almost 72%. That creates this staggering 144% performance gap. So not only did you lose money, you missed out on one of the biggest market rallies. That's a tough pill to swallow.
So that stock chart, it paints a pretty grim picture, right? It looks like a company that's completely falling apart. But here's where things get interesting. Does that price, that red line going down, actually tell us what's happening inside the business?
And this is it. This slide shows the great disconnect. That red line is the stock price. You see it falling off a cliff. But those gray bars, that's the company's revenue. It's doing the exact opposite. It's more than doubled, soaring from around $9.5 billion to over $24 billion in the same period. So how on earth can a stock be shrinking while the business is exploding?
We are about to unpack the hard numbers that completely challenge the story that stock chart is telling. Speaking of unpacking things, if you get value from this kind of deep dive analysis, do me a quick favor and hit that subscribe button and ring the notification bell. That way you won't miss the next one. All right, let's get right into the evidence. We're kicking things off with what might be the most important part of this whole story, the company's incredible financial turnaround. So what's so fascinating here is this massive pivot they've made. For years, Block was your classic tech company, all about growth at all costs, spend money to get bigger, and worry about profits later. Well, that era is officially over. They've swung from losing over $500 million to a projected profit of nearly $3 billion. That is a fundamental change in how they run their entire company. And this isn't just about them cutting a few expenses here and there. Nope. The business itself is getting way healthier. They've improved what's called the unit economics, which basically just means that every single dollar of revenue they bring in is now way more profitable. You can see it right there. The gross margin has expanded by 1,400 basis points. That's a massive 14% jump in efficiency. And all of that leads to what a lot of investors call the holy grail, free cash flow. This isn't just paper profit. This is the real, actual cash the business is spitting out. Just a couple of years ago, Block was burning through cash. Now, that cash flow engine has fired up, swinging all the way to a positive $2.4 billion. This is the proof that the business model is now working and can sustain itself. Let's just let that number sink in for a second. Over $2.4 billion in positive cash flow. This is not some accounting gimmick. This is real money the company can now use to invest in new products, pay down debt, or give back to shareholders. This is what separates a truly healthy business from one that's just trying to survive. Okay, so the financials have obviously turned a huge corner. But what does the management team think? And more importantly, what are they doing about it? That brings us to our next section, a case for confidence. First off, this company is built like a fortress. Just look at their balance sheet. They have over $13 billion in cash and other liquid assets just sitting there. And even after you subtract all their debt, they're still sitting on a pile of over $4 billion in net cash. So the risk of this company going bankrupt anytime soon, it's pretty much zero. They have all the firepower they need. So what is management doing with all this new cash they're generating? Well, they're buying back their own stock. And not just a little bit, over $2.2 billion worth. You know, talk is cheap, but this is one of the loudest signals a management team can send that they believe their own shares are dirt cheap and seriously undervalued by the market. Actions really do speak louder than words. And this right here really shows you why they're buying it back. Back at the peak, investors were willing to pay almost 37 times the company's book value. Today, even though the business is bigger, it's more profitable, it's generating cash, you can buy it for less than 2 times its book value. That is a 95% haircut on its valuation. You are getting a much better company for a tiny fraction of the price.
So the case for value here looks pretty darn compelling. But hey, no investment is a sure thing, and it would be crazy not to look at the reasons why the market is so negative in the first place. So let's get to our final section, the verdict and the risks. So, why is the stock so cheap? Well, there are a few real concerns. First, the company has a history of high stock-based compensation, which can dilute the value for existing shareholders. Second, Block's business is tied to consumer spending, so a bad recession could definitely hurt them. And third, their big bet on Bitcoin ties the company's perception to the wild, unpredictable swings of the crypto market. Make no mistake, these risks are real.
So let's wrap this all up. The market, right now, is pricing Block like it's a completely broken company on the verge of collapse. But the actual financials, they show a fast-growing, newly profitable, cash-generating machine with a rock-solid balance sheet, all trading at a historically low price. And according to this analysis, that massive disconnect, that's where the opportunity is.
And that really leaves us with the final big question. You have two competing stories. The market is telling a story of risk. It's worried about dilution, a recession, and crypto. But the financials are telling a story of deep value. They're screaming about revenue growth, profitability, and tons of cash flow. So which story do you believe?
So what's your verdict? Is Block a once-in-a-decade kind of opportunity, or are the risks just too high to ignore? I want to know what you think, so drop your take in the comments below. And hey, if there's another company you're dying for us to break down like this, let us know which one. And of course, don't forget to like and share if you found this valuable.
Thanks for watching.